Hello YouTube viewers, welcome to another simple invest video. So in today's video, we will talk about how to do some fundamental analysis on stocks using this website Bloomberg.com. So if you're not aware, Bloomberg is a famous news agency in the world, and it provides a lot of financial data, specifically the Bloomberg terminals that they are quite high end, so mostly only stockbrokers or other financial institutions will actually subscribe to it. However, the website is free to use. You can, I think, do subscribe for like better features, but now I'll just talk about the free version. So to get to this website, it's pretty simple. Just go to Bloomberg.com, select the region you're in, or you can just Google for Bloomberg. And for now, let's search for a stock. For example, let's search for Apple, which is so you can just simply click on this search button here, just type Apple, and they will have a list of articles which Apple is in. So just select any one of these articles. Okay, this is a video, and no, this is not what we want. You'll want something that has, okay, there's some ads because I paused the ad block to support the channel. Okay, let's look at this. What we're looking for is this, where Apple.Inc is underlined. So when you click on this underlined link, it will bring you to the stock code. In this case, Apple stock code on the New York Nasdaq Stock Exchange is AAPL. And this is Apple stock price as of last night, because I'm recording this in Asian time. And you can see their 1 day, 1 month, as well as 1 year stock price chart on the right here. So important things we want to note for fundamental analysis. Obviously, the chart is important, but that's technical. So the key statistics here, as well as the income chart, which is income statement, balance sheet, cash flow, which is further below. So first, let's talk about the key statistics, the price to earnings ratio, which I will not explain here because I did a video on it, I believe a few years ago. I can link that to this video. Then their price to book ratio, price to sales. 1 year return is obviously how much the stock has grown this past year. And earnings per share, EPS. Dividend, well, if you're into dividend stocks, it may interest you, but we're not going to talk about that in this video. So these are the important key statistics to judge when will be a good time to invest into the stock. But further on below this is of more important concern in my opinion. Their income statement, balance sheet, and cash flow. So in this mode, there are the quarterly statements. That means for Q3 this year. So you can see the black is their revenue, where the blue is their net income, which means after minusing off or removing the expenses involved from the revenue. And what's their profit margin? Profit margin obviously is important, but mainly we look at net income. I want to see if this company is earning money, so I'll judge based on their revenue and their net income. So you can see that from Q4 2018 until Q3 this year, it seems like their revenue as well as their net income has dipped quite a bit. So maybe you can look at it on a yearly basis. Okay, so 2019 yearly is already out. And you can see that 2018 seems to be their best year, with 2019 having a dip. So their revenue, Apple's revenue, and their income might be slowing down. So next we look at the balance sheet. Balance sheet is basically their total assets. That means what are the assets that the company owns, liabilities, which is what they have to pay out, what do they owe to other companies or other banks, and the amount of debt compared to their assets. So obviously, if you see assets are growing, this is quarterly, which is good, but you can see that their assets actually have dipped since Q4 2018. And if you look at the yearly assets, seems like 2017 is where their assets are at their peak, where in 2018 it starts to reduce, and in 2019 it starts to reduce. So 2018 seems like it was the peak of their liabilities, whereby 2019, even though their assets has dropped, their liabilities has dropped a little bit, but looks like should be still the same level of liabilities as their 2017. And this red line is quite worrying. That means their debt to assets. Their debt has actually increased year on year from 2016, and with the highest debt to assets, because this is a 40 billion mark. So I'm not too sure whether this indicates a debt of 400 billion. I'm not too sure. We have to look into their detailed balance sheets, which we'll go through in another time, in another video. And next we have their cash flow, which means how much cash they're bringing in and how much cash they are like investing out or using from their banks. So this is the quarterly one. So the blue one is cash that they use for financing. That means to pay down their debts and so on. The red actually means investing. So their investing seems like it's actually negative. So cash flow from operating income, that means their day-to-day operations, is the black one, which is what they bring in. And Q4 2018 was the highest. Financing is what they actually pay out for their debts, and they paid the least minimal financing in Q4 2018. And it seems like their operating income is getting lesser and lesser. There was a dip in this year, and even as of Q3 2019, it couldn't hit the peak. The top of Q4 2018, where we look at their annual cash flow, and you can see a pretty scary story here. I mean, the good thing is their investing income has gone up in 2019, whereby in 2016 and 17 they actually paid for investments, but they also had a lot less financing debt. But in 2018, their operating income was the highest, but they had to pay a lot of financing as well, whereby in 2019 their operating income dropped, but their financing was just as high as was 2018. So all in all, it looks like cash flow, income, and balance sheet wise, Apple isn't as great as its stock price might determine, because its stock is at an all-time high at $279. It's at a 5-year high, I believe probably a 4-time high. You can click here to view a full chart, but the most we go is 5 years, so I can't go beyond 2015. But it's at an all-time high. But their key statistics and their income sheets doesn't really paint such a good picture. So let's see if we can minimize the chart. Yep, and go back to this. Okay, so this is how you read some of the information here. So let's do another quick example of let's search for another company. Let's say everybody's favorite fast food, McDonald's. I wonder if I spelled it correctly. Okay, we can't find McDonald's here. Another way would be to search for their stock code, which is, for example, you can just go to Google. You can look for Google for McDonald's stock code, which is MCD. So if you go to Bloomberg and search for MCD, yeah, so we found McDonald's. Click on any of the articles and look for this McDonald's Corp, which is underlined, and it should bring you to the stock code. So McDonald's currently is priced at $195.63 per stock. It is no longer at a 1-year high. This is their PE ratio, their price to earnings. Price to book is not displayed, maybe negative, I'm not too sure. You have to look at their income statement, their 1-year return, and their earnings per share, dividends, and their income statements. So it looks like revenue is going up, profit margin is going up, looks nice. Net income is still pretty stable. Let's look at their annual earnings. So annual earnings seems like from 2015, their revenue has actually dipped, but their profit margin has increased. So maybe due to some cost-cutting measures, increasing their profit margin, but still lower. The decreasing revenue for the past 4 years is quite a key concern. Balance sheet wise, assets are going up, but their debt is going up as well. Seems like their liabilities has gone up this year. Let's look at their yearly charts. Okay, we can only see up to 2018. So assets wise, it has grown, but their liabilities has reduced quite a fair bit. Because 2015 was their year where they had the most liabilities. Looks okay. Seems like their assets are still growing. Oh wait, the black one is the assets. So I was wrong. 2015 was the year where they had the most assets and the least liabilities. But now to 2018, their assets has actually dropped, while their liabilities has actually grown quite a bit, which is why the debt to assets red line is so high. So that's quite a fair bit of concern. Cash flow. So operating income is growing steadily. Investing expenses, not a lot, but financing expenses, it's fluctuating. So let's look at the yearly ones. Okay, operating income seems to have grown. It seems to be the highest this year. All this is in terms of millions, as indicated here. So operating income is the highest in the last 4 years. That's for last year, 2018. We probably have to wait for another quarter to see the 2019 results. Financing expenses doesn't seem to be as high as 2016. So all in all, it seems like McDonald's has less revenue than previous years when compared to 2018. And they have seemed to have some cost-cutting measures in place to reduce costs and increase their profit margins. But the fact that their revenue is decreasing throughout the years is not a very comfortable thing. So, however, of course, if you wish to invest in a company like McDonald's, you can still try and time an entry probably by technical analysis, looking at their support and resistance, because currently looking at their chart, maybe you can view a full chart here. Let's view a 5-year. Looking at the chart, it seems to be smoothing out here and might be a bit of upside. Looks like it's going up a little bit. However, fundamentally, I don't know. I'm not too keen on purchasing McDonald's because their revenue is actually going down. Okay, so these are just examples from 2 famous worldwide companies, and you can do this search on Bloomberg with any company that you like. So the best thing is to go to Google for your company stock code, using the stock code search here, and click on the name that is under. When you look at the article, click on the company name that is being underlined, and it should bring you to the stock code. Okay, so that's a little bit of a long video today. So that's it for Simple Invest. So thanks for watching, and we'll see you next time.